Hey, I'm back once again with another stock market update. Right now, we're looking at the S&P 500 futures. I have two different bullish scenarios that we'll be looking at. The first one we will look at is a basic bullish scenario. And so, picking up from last week, this is pretty much right on schedule. Let me go to the 4-hour chart. We had a shallow correction here in this wave 2. And so, in this wave 4, I was expecting a deep correction. I can go ahead and put these Fibonacci retracements on there. So this wave 2 came close to the 382, this green line, but it didn't quite get there. So since the wave 2 and wave 4 are opposite, wave 4 had a deep correction going all the way down here. And typically this zone right here is the breakout zone. I'll probably do a video sometime in the future about that. Most of the time you get a very strong reaction once a correction comes down to this point. So I think this is the bottom of the correction. We'll have to wait and see, wait a few days and see what happens, but I believe this is the bottom. Even if it's not the bottom, we can put a stop loss here right below wave 2, and our risk would only be 2.29%. And if you didn't catch that bottom and you just get in from here on Monday, your risk would be about 4%. So not much to speak about here. I believe we're going to turn around and go up for wave 5 and target somewhere around this range. But one thing I'm watching for is how far this wave 3 goes. So if this wave 3 does not go beyond this point, which is the 1-to-1 extension of wave 1, or in other words, it's the same length as wave 1. So if wave 3 is shorter than wave 1, then our overall wave that ends here will not be a very long wave, because wave 3 can't be the shortest wave. So I'm watching this very closely, and if it falls short of this point, then I would be looking for, let's say for example, if it falls exactly where I have it here, whatever happens with wave 4, whether it goes down here or corrects to here or wherever it goes, wave 5 will be shorter than wave 3. So we'll have to watch and see how that plays out. And the next thing we want to look at is wave 4, this wave 4 right here. Since this wave 2 is a very shallow wave, then we can expect this wave 4 to be a very deep wave. So the same as what we have here in the subwaves, it'll happen here at a bigger scale. All right, let's move on and take a look at the Dow. And here we are. This is the Dow Jones futures. So this is the second bullish scenario that I have. So side note, the Dow and the S&P 500, they both have similar patterns. So both of these different patterns or both of these different scenarios apply to each one. The S&P 500 scenario that I just showed was the regular bullish scenario, but this is the extension scenario. Extensions are very tough to track, like I've said before, but this is my attempt. So as I'm looking at this, there's a very good chance that this third wave from here to here could be an extension. If that happens, it could mess up a lot of the analysis, but it will mess it up in a good way. So we do our risk management and we put our stop loss below this subwave 2 here. So that will be our stop loss. With the risk of roughly 4 or 5.5%. And the potential target is up here and even beyond. So the potential reward is 40%. So you risk 5% to try to gain 40%. That's a good risk reward ratio. All right, so what makes me think that this could possibly be an extension? The reason why I'm thinking that is because wave 3 cannot be the shortest wave, and wave 3 tends to be an extension. And so what that means is that here we have the one-to-one length of wave 1. So in order for wave 3 to not be the shortest wave, it may have to be longer than wave 1. And so the previous scenario I had with the S&P 500, wave 3 was finishing somewhere around here, shorter than this distance. And so there's a very good chance that that doesn't happen. So I would like to look at the possibility of this wave 3 being an extension. And let's go to the 4-hour chart. All right, so this is the 4-hour chart. We are looking a little bit closer. Let me delete this because it's a little bit messy looking. All right, so here we have wave 1 and wave 2, and then this could be wave 3, and this could be wave 4. Or if it's an extension, this could be wave 1 and wave 2, and then we have another subwave 1 and subwave 2. Don't get lost in the fractals. I know it's easy to do, but just stick with me. That's why I had to go ahead and actually do these Elliott wave diagrams the right way by changing the degree just to make it a little bit easier to read. So this trend has a circle around it. This trend has the parentheses, and this trend has none. All right, so if this is an extension, then it would look something like this. So a subwave 1 here, then wave 2, 3, 4, 5. It could be even longer than that. Like I said, extensions could wreck the analysis. They could go much further than you expect. But for now, I'll just chart it like this. So that would make this a wave 1 and 2, and all of this would be wave 3. Then we have a wave 4. and then a wave 5. And that would finish up this larger wave 3. And then it would correct and come down for wave 4 here, and then possibly reach as high as here. So that is my extension scenario. Take this extension scenario with a grain of salt. It's just something that I have a strong feeling that could happen, but we have to watch things and see how they play out. You can never force the chart to do what you want it to do, so you have to be ready to respond to different scenarios. And so that's why we have risk management. Let's just say if I'm totally wrong and this thing drops and goes down, we would have our stop loss here, just as a safety precaution. So I actually bought into this dip. Going back to the S&P 500 futures, I saw this playing out, and I decided to buy like right here. I could have waited. I should have waited. I know better, but I knew it would likely do this, but I still bought here anyway, because as we can see now, the difference is not that big. But I bought into this, the SPD, which is a S&P 500 high dividend ETF. And so I bought right about there, 28.41. So we'll see how it plays out. So going back to the S&P 500, what makes me think this is still bullish? Of course, my Elliott wave analysis plays a huge part. But some of y'all, when y'all saw this, y'all might have panicked. But I was expecting something like this. And if you look at the previous video, I showed something like this happening. I didn't have it going as deep, but I probably should have mentioned that. But I've been saying it all along. Whenever we have a shallow wave 2, we tend to have a deep wave 4. So I was expecting this. So for me, this is just a buy-in opportunity. The deeper the dip goes, the better it is for me, because it's easier risk management. So what makes me think this is still bullish? Aside from my Elliott wave analysis, I also use indicators. Let me go to the daily chart. And so one of the indicators I use is RSI. And looking at this RSI, let me clear some of the clutter. So right here we have the 50 line. If you look all the way over here, it's at 50. Some of y'all, well, most of y'all might not understand much of this at all, but for the traders that are watching, I'll explain a little bit of this. And if this is your first time hearing this type of stuff, you can learn a little bit from it. So this 50 line is a very big support and resistance on the RSI indicator. The RSI is this blue line here. In the background, we have the RSI stochastic, which is this red line. So if we look at what happens, how this behaves, around this 50 line, we can see that here, the RSI tried to go up, but it got rejected by this 50 line. Then it went down again and went back up, and it broke above. Once it got above, it started bouncing off of the 50 line. Then it broke below again. Then it kept getting rejected. And so it's a big support and resistance. Here we can see it bouncing again, and then struggling, then getting rejected there. Then it comes back above, and it bounces, and then it shoots up. So here, I expect, as a rule of thumb, typically it's not just going to go straight down through the 50 line on the first attempt. So I'm expecting it to bounce back up at least once. So that makes me believe that this is still bullish, looking at the RSI. So that's pretty much it for this video. One thing before I go, two things. This is not financial advice. I'm not a financial advisor. These are just my thoughts. You are responsible for your own trading and investing decisions. If you need help, seek out a financial advisor. If you want to practice and learn how to trade, check out Webull. Webull has a paper trading feature where you can trade with fake money. Maybe you can follow some of these trading ideas on a paper trading account. All right, that's all for this one. I'll see y'all in the next one.